Hello, guys. Today I was watching one of the podcast or a talk discussion from the One Person Club, which is run by Sharan Hegde, and the guest was Mr. Biren Parekh. So I saw this the entire video and felt really nice by looking at like humbleness of Parekh sir. And the thing which captured me in this entire discussion was the statement like if you invest into financial services companies for 6 months before the election, 6 months before the election, and then it gives a good return, best return post election. So we may, yeah. So I'm sorry because while capturing, it's not capturing this system video. Sorry for that, but this is a statement which was done, made in this video and which captured my attention. So later I thought to do some kind of quantitative analysis on that. So I did this and let's see what was the result. So from NSE, I captured this all 20 stocks, Nifty financial service stocks. There are total 20 now. And then I did that calculation in the Google Sheet. So you see this column D and E, which is, this is a 6 months back, which is 7th December 23. And this was the 4th June, which was the election counting day or a result day. So these are the closing prices on those particular days for all the stocks. So this is the return per share from one share, and this is the percentage. And the total outcome was out of 20, 11 were turn in positive, turn positive, like end of the seventh, end of the day on 7th December, and nine stocks were negative. Okay, so just hypothetically, if we had invested 1 lakh in each stock, totally around 20 lakh, we would be getting this 29,823 rupees, which is close to 1.49%. Honestly, this is not a great return, but this is not only we should not uh, come to a conclusion saying that this is not a good return, but we have to see some more other things. So any good trader or any good investor will not buy at high valuation, right? If you ask me, I'll not straight away buy on the 7th December, like taking this statement. What I see, the stock is undervalued or overvalued, or it is in a supply zone or a demand zone. So I'll take those things into consideration before putting my money. Okay. And one more thing, what happened, right? Let me show you State Bank of India. If you remember on 4th of June, like market crashed heavily. So in this situation, we cannot expect a good return, provided if you had exited just a day before, which where in which like market rallied really in a good manner on third because of the exit poll, and the market sentiment was very positive. And then on the 3rd June, if you had exited, probably you would have got very good return. But on June 4th, counting day, so we ended up getting a very small return. So if you see, for all the stocks, it's a it's kind of a mixed uh, return. So if you go by just statement, it didn't give the result. But if you are a good trader, if you know like kind of like a little bit fundamental and technical, so which I prefer, I do a lot of time, and that makes us how to gain this more profitable how to do this more profitable trades using our skills, not just by going blindly just with a with kind of the proper, like, with the dates and all. Okay, so if you find this video interesting, just do a comment and let me know, like, what was right, what was wrong, and any kind of feedback is welcome. Thank you.